What is going on, my people? Wealth Our Way Nation is always in the building. It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I'm gonna lose my glasses because they're fogging up on me and I can't do it. So in any event, I want to welcome each and every one of you to episode 137, Wake Up and Smell the Economy. But before we get into that, I want to practice the attitude of gratitude and thank each and every one of you who are here with me live as I stream across the Wealth Our Way Facebook page and the YouTube Wealth Our Way Network page. I want to give a special salute to every member of Wild Nation who will be watching this program after it's been recorded overnight, over the weekend, wherever they can squeeze 15 minutes of financial literacy in. And then a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio recording of this very here program. You guys had an opportunity to meet Brandon Coppola last night. Wasn't he amazing? And now you know why I have an affiliation with the Life 101 platform. That is Brandon Copeland's personal financial literacy, financial information platform. And I am a willing, happy contributor to that platform with our 15 Minutes of Finance program, as well as the Financial Power Hour. Speaking of the Financial Power Hour, I told you guys there would be no program a week from Wednesday, which would be March 23rd. That's no longer true. My surgery is being pushed out into the future for a number of reasons we've discussed on 15 Minutes of Finance. And with that being said, I'm available to do the show next Wednesday. And, you know, as we talked about last night, as I've said on previous broadcasts, my network is my net worth. I reached in the phone. I said, it's Sports and Entertainment Month. Who can I get to come on and bless us with a nice hour-long conversation that that my audience will find informative, educational, and most importantly, also entertaining? I'm bringing Mr. Party Time himself, Tracy Lee. Tracy Lee is a recording artist. He is an attorney. He is an author. He is an entrepreneur. He's a husband and a father. He's my childhood classmate. Tracy Lee has rapped alongside Biggie Smalls and all types of other big names. I'm not going to give it all away right now, but Tracy Lee will be talking with us next Wednesday on just how to navigate the road that you are going to face through your 20s, 30s, 40s, and 50s. Oftentimes, it's important for us to reinvent ourselves. How we start a path may not be how we finish the path. The path we start on may not be the one we end on. And Mr. Tracy Lee is the guy to walk us through that path. I'm super excited. Next Wednesday, Financial Power Hour with Tracy Lee. So what is Big Tank talking about? I come up with these titles. Yes, I'm trying to grab your attention, but there's always purpose behind them. What does wake up and smell the economy mean? When you are a Wild Nation family member, the first thing I want to make sure you are walking around is educated. I want to make sure that the literacy, in the term financial literacy, it applies to you, that you know what is going on, what the current events are happening and how they affect you. I saw so much information being shared over the internet over the last couple of, I guess it was a couple of days, week and a half, on the Amazon stock split. People were taking that as an opportunity to have a conversation. Now, don't get me wrong. Everything is a reason to have a conversation. But the number of people who were calling me, asking me what the stock split meant, really let me know that people still don't understand the basic fundamentals. So let me break it down for you on the stock split. Let me also talk about the current interest rates that are rising. The Fed raised rates 0.25% yesterday and have pretty much announced that they're going to raise rates, I want to say 6 or 7 more times this year. And that's not set in stone. They could raise it as much as they want to. Live, broadcast, sorry, out the shower, humidity makes it happen. I got to wipe my brow. There we go. That's what happens when you got a live broadcast, baby. So let's talk about Amazon, the stock split. Then we'll talk about interest rates. Then we'll talk about a little bit about cryptocurrency before I sign off today. What does a stock split mean? A stock split means that you have a certain number of shares in circulation. And let's just use simple numbers. There are 100 shares of a particular stock in circulation. That stock is currently trading at $10 a share. When you multiply the number of shares in circulation times the price that the stock is trading at, you get the market capitalization of a company, basically how much broad-based equity they have. So in this instance, 100 shares, $10 a share, the company would have $1,000 of market cap. Now, the companies we talk about, Amazon, Google, Microsoft, their numbers are in the billions, but I'm trying to keep the math simple, and I'm showing you an example of a company with $1,000 market cap. A company decides, and we will get into the reasons why they would decide to do this. A company decides that they are going to split their shares. They are going to, instead of having 100 shares available, did I say 100 or 1,000? Now I can't remember. Doesn't matter whether the example is 100 shares at $10 or 1,000 shares at $10. I think I said 100. But instead of being at 100 shares, that they want to authorize and split and have 200 shares available. So they're going to basically, everybody who has shares has them recorded. There's a custodian who's the record keeper of their shares. If you had 1 share of Amazon yesterday and we do a stock split, you now have 2 shares. Now, here's the thing. If it was trading at $10 yesterday, it's not still trading at $10 today. The price cuts in half. So now you have 200 shares at $5 a share. 200 times 5 is the same $1,000, baby. So the company is still worth the exact same amount on Tuesday that it was worth on Monday. Nothing has changed. It has just lessened the value of the price of the stock and doubled the quantity of the shares. So if nothing's changing, that brings us to the question of why even do a stock split? There are a couple of reasons why you do a stock split. One of the main reasons is you want to have more shares available to be authorized so you can reward employees with shares of stock. You want to kind of do a level set on your actual stock price. We still, in our mind, and this is a consumer problem, we still in our mind look at the dollar price of a stock and think that's the value of the stock. If I tell you Amazon is trading at $100 and Google is trading at $500, you immediately think Google costs more than Amazon. I understand why. If you saw a loaf of bread at $100 and another loaf of bread at $500, you would be correct. That one loaf of bread is 5 times more expensive because the loaves of bread are exactly the same. But when you look at one company versus another company, those companies aren't exactly the same. You have to then look at the value of the company. And that value is not determined by what price the stock is trading at. The value of a company is determined by a ratio called the price to earnings ratio. It's also known as the PE ratio, not the public enemy ratio, the price to earnings ratio. What that means is how much earnings are you purchasing with the price of this stock? So they normally break it down. $1 of price buys how much earnings. So if you have a company with a PE ratio of 21 and another company with a PE ratio of 42, the company with 42 as the PE ratio costs twice as much because you're buying $42 worth of earnings for every dollar you spend. You're buying $21 of earnings for every dollar you spend with the, I'm sorry, I said that backwards. The company that has the 42 ratio is worth more because you're buying more earnings with your dollar. That's all you care about as an investor. As an investor, you are buying a company because you think that company is going to do good in business. How do companies value how they've done good in business? With their earnings. They have sales. They subtract from the sales their expenses, and what is left are their earnings. So if you can buy $42 worth of earnings for $1, that's a better deal than only being able to buy $21 of earnings for $1. So we as consumers tend to be looking at the wrong number. We look at the stock price and say, oh, that stock is too expensive. The stock price has no relative value as to what the cost of the stock is. It is basically the way for people to understand how much equity a company has available, how much market capitalization a company has available, what a buyer is willing to pay a seller for a share of the stock. Now that I'm going on this tangent, I realize I'm not going to get into interest rates and I'm not going to get into cryptocurrency, but this is important. This is a very important lesson. PE ratio versus the actual dollar cost of a stock is very important to understand. So when you do a stock split, if you look at the price to earnings ratio, there's no change. And that's what really tells you whether the cost has changed or not. Because if you have $1 buying you $42 worth of earnings before a stock split, $1 still buys you $42 worth of earnings after a stock split because it's not associated with the stock. The amount of stock is for the market capitalization. This is probably confusing the hell out of a lot of you, but it's an important topic because what I don't want for my audience is for them to get sucked in to the next person on the internet who throws up a flashing symbol about, hey, Amazon stock split 20 for 1. It's on sale. Come get this money. It's not, though. It didn't change anything. It's cosmetic. It really is an accounting adjustment. Conversely, though, because, and we do have to factor this in, because most people do not understand what I just said, they may now take a look at buying a company because the prices went down. Here's the thing, though. Anybody who is actually trading stocks, buying stocks, trading mutual funds, buying mutual funds, realizes that what the actual cost that you have to pay, the price you have to pay for these companies, doesn't come into play anymore because you can buy fractional shares of a company. Meaning, if I were to want to buy Amazon stock, but I got $100, and Amazon stock is trading at $200, I could buy 1/2 of a share of Amazon. I could buy 70% of a share of Amazon. There's different platforms that will allow for fractional ownership of a stock. Otherwise, you can buy an individual share. When I've said this to you guys before, when I got into the business, you couldn't do that. You had to buy the whole lot. You had to buy 100 shares of an individual stock. This sweat is killing me today. But you had to buy 100 shares of the stock. Your fractional ownership would be purchased in an ETF or a mutual fund. It would be your money pooled with other people's money. So moving forward, when you think of things like they have systematic stock investment programs, they're called SIPs. These allow you to, once again, send in money to buy fractional share ownership of stocks. That would be the only way when I got into the business that you could buy stocks. But now you can buy one share at a time, a fractional ownership at a time. It makes it crazy for the actual custodians and the record keepers to keep track of the ownership of stock. But for you, all you need to know is, hey, I got $100 of Amazon. I got $200 of this. And as the price goes up, your value of your portfolio goes up. I own, I want to say 0.19 of a Bitcoin because I can't afford a whole Bitcoin right now. I'm buying a little bit every month. It's fractional ownership. So I hope that didn't confuse you guys. We're getting ready for the weekend. We can cover some more of this topic on Tuesday of next week. I want to talk to you about the rising interest rates and what that means for you. But I really wanted to cover what a stock split was and give you some education because it is important for you guys to always be learning more and raising your level of literacy, because only when that happens is my slogan true, that wealth is not only for the wealthy. I want you guys to have a great weekend. I will see you Tuesday and we'll continue the economy discussion. Take care.